Hey folks, welcome to Tuesday, the 26th of April 2022. I think I said 2021 yesterday. Apologies for that. So yesterday we had a bit of selling coming in on equities in the pre-market and just after the open. Quite a bit of downside pressure on the SPOs and the Dow, but coming into some really great areas that we'd identified yesterday on the pre-US video and indeed in the Discord Pro Trade room. And what a buying opportunity down around 4204s on the SPOs. I think the downside is being pegged to the Chinese and Asian lockdowns in general. A lot of demand destruction there on oil as well. We did see downside yesterday in oil, then recovered late in the session. And at the moment, we've seen kind of gold down and hovering around the 1900s. I'm actually going to get flat on that position, guys, for now. So, I think while we have had good buying opportunities yesterday, buying a dip, that doesn't mean that, these are the lows for the year and we can hold those trades for, multiple weeks on end now. But I'm very interested to see if we can hold that bottom of the range we put in now. This range we've fallen back into on SPOs, NASDAQ, and the Dow kind of fell out of that range yesterday. But let's get over onto these charts and see what we can see. Of course, we do have a lot of earnings today coming out. Just before I switch over to the charts, we've a couple of pre-markets in already, positive on I think Novartis already, but we've got Santander, Michelin, Orange, HSB, Novartis, UBS, Alphabet, Microsoft, GM, Visa, 3M. So it's quite a lot of earnings to come across the bow today. So you do want to be careful with your positioning in the pre-market. But generally, some big levels traded in equities yesterday. So let's go over here and have a look at the charts. Talking about currencies, first of all, we do have this target on the upside in the dollar. We're finally here. It's been months in the making. Remember we were talking quite a lot about the support that we can get at 97.69s. We were looking at this in detail for what was the best trade execution earlier on, and it was just very, looking for the shorts in the euro here. I mean, the longs in the dollar, quite obvious, but shorts in the euro, really tricky to get onto. Any of the levels that you have in the euro, generally they were getting fluffed, whereas the levels you can see in the Dixie, just really well respected. Lovely trades to be had for the swing traders here. And so, look, target up is going to be this trend here. And that's going back to the high that we got on the 2nd of January 2017, the week of, and then this double tap 2 weeks high here from the 23rd and the 16th and the 23rd of March 2020. And so now that trend is going to come into play this week. It looks like, not too far up from where we trade now. So dropping that off, you are seeing the euro is coming down to this level, spot 0.6560s on the downside here. So we got that marked up. Generally, I think with the ECB set to start with the tightening and rate hiking in July, I think we could, start to put in a bottom on the euro really, and with that kind of more hawkish stance, we can then maybe look for appreciation in the euro and a softening of that dollar. So let's see what sort of interaction we get up here on the dollar trend. When we get there and see if we're down here in the euro, we can kind of get into a trade here. 0.6560s, or maybe you just want to short the dollar, but if you are tracking the Dixie index like this, there's just a plethora of FX trades, against those dollarized pairs. If you're an FX trader, that's the Dixie is your bread and butter indicator. All right, looking across on equities, you're seeing the NASDAQ came back into that rarely seen but well traded 500 EMA. Yeah, it got flushed out yesterday. Weeks and weeks ago, we did. Well, where was this? This was March 15th. We came down, touched this to the tick, and then we went bid on up. for quite a while. You can see that interaction coming in here, and we bid up quite handsomely after that. So if we go back to where we trade now, we generally found support on that area yesterday. Very tricky trading, as you can see, and only really started to get its head up out of the muck at 5:30 there yesterday evening. So I think we can continue to push back on up in the range to test around the R1 today. The scene of the crime for the bear flag breakdown that we talked about in yesterday's video. So I think it would be prudent if we come back, test here, and then look for the shorts to complete the movement down through this blue range area to test on the 12,939s and 898s. Now on the SPOOs yesterday, really clean action, really clean action here yesterday. I mean, just show you the trend we were looking at in the pre-market video. The lows here on the 24th of Feb, on the 15th of March. Came in to check that trend yesterday. Now, just note here that we did breach the trend ever so slightly, right? We did breach that trend ever so slightly, but we did kind of flush out on the bottom of that range. I'll blow up the 60-minute here. You can see that action. So we were kind of taking trades, scalping off of this trend test here on the initial test. We were making sure not to be apprehensive and stepping into the market too early, like in the morning here. Even when it was coming down to test, there was a couple of moments where it was kind of stopping in front, looking like it wasn't going to trade the trend, and then did. Nice big splash back up here, for example. If I zoom in, you can see, and just widen this out, you can see kind of that, initial splashes in, big, then reactions back above, test down, another big reaction up, and then flushed out there. I think around 4:30, just the time we were getting out of the market, and then bid up into the close, and we are holding quite well now. So that's been a pretty technical play on the SPOOs yesterday, and lovely trading conditions. So on the Dow, actually didn't have the bandwidth to focus on Dow yesterday, but generally just bring this into real time. The high so far today in Asia Pac, and indeed on the close last night, was this sort of line in the sand, if you like, at 34,031s, the high of the 3rd of March last year, this year, and then it was the low of the day on the 12th of April. So resistance found there not only this morning, but also yesterday on the close. So can we push further down? I'm going to be looking at the SPOOs and the SPOOs primarily to see what's going to happen here. I think there will be buyers at the 33,717s, but we have a lot of earnings to come out today. We want to see how the market interprets those earnings. If you ask me, I think we are going to need to test on this trend the same way we have done in the SPOOs. And with that, you are probably going to get a breakdown on the SPOOs on the current trend here. So, while there has been good buying here, I think it's prudent to flatten out of that stuff. This isn't trading or investment advice. I just personally, I was flat out of these scalps off of the trend test yesterday, and then left it alone as I was off the desk. And probably should have been holding runners for the through the evening session into the close. But that's fine. We may get a retest down here, and then a push, or retest it down here, and then a breakdown, in which case you'll probably be into a really big short side scenario. So look, we don't want to front run these markets, just really mapping out contextually what's going on and where we sit within equities right now. So under the cosh, definitely Asian lockdowns not helping. Oil as well, didn't really trade that much oil yesterday. I think where it stopped here was not really an area I had in mind. It just wasn't, to be honest, paying too much attention on oil yesterday, but we did bid back up out of this low to recover where we pushed to on the high on the invasion day, 98.52s. So personally, I think we need to actually auction lower to find the real big buyers to then look for higher prices than new high on the year. I'm not the only one that kind of is looking at that. So nat gas, just the corner of my eye, got very cheap yesterday. we did recover the gap actually that we had here, and then bid into the close, but quite slow trading indeed. Probably best to either just focus solely on nat gas, or not at all, because it's a very sleepy contract. It can be absolutely dawdling along for hours and hours, and with no fundamental catalyst or apparent fundamental catalyst, it will just completely have a run 7, 8, 11%, and you could be caught offside quite easily. Gold as well, just to talk about technically what's happening here. We have this what's called a bear flag breakout. So we broke out of this bear flag to the downside. I was looking at shorts on the retest, but it's come too far back in now, so I've cut that loss, and I do think we can auction lower on gold. It's just a case of when is it going to find resistance here? Who knows? Maybe on a retest on the pivot 1906.7s this morning. So okay, I think that's pretty good run around the houses for the moment. Just watch out for your currency trades with what will be a stronger environment by the end of the week. Well, we are already in a strong dollar environment anyway. So, all right, that's it. Thanks for tuning in, and I'll speak to you tomorrow morning. Cheers.